What's going on, guys? My name is D. Anthony with Evolution Traders. In this video, I want to talk to you guys about how we can focus on the bigger areas of interest and then how we can scalp and day trade these bigger areas of interest. Now, what are the bigger areas of interest? It's going to be previous day highs, previous day lows, overnight session highs, overnight session lows. What we really want to do is we want to avoid getting trapped or avoid taking plays in trades for the sake of taking trades. A lot of you guys will see a short setup. You guys jump into the short setup. It traps you out. Market goes higher. You're wondering, why did I get stopped out? This is a setup based on my, strategy. My strategy is supposed to work. Why did it not work? Well, guys, we have to stay on the right side of the trade, meaning that you need to be ignoring your setups when it's going against the higher time frames. I want you guys to think of it like this. If you see a train going down the tracks and you're coming in the opposite direction on foot, are you going to run alongside the train in the opposite direction to get in on the train, to get on the train? No. If anything, you're going to wait for the train to pass by and try to jump onto the train in the same direction that it's going. So that analogy is the same thing when it comes to trading. What we want to do is wait and allow some of the bigger time frame levels, allow that train to come on by and pick us up. Now, a lot of you guys have problems with staying disciplined, problems with being patient, problems with just allowing the trades to come to you. So many people think that when the market's open, you have to be putting on a trade, you have to be in a trade, you're constantly looking for this trade, that trade, and then you're not taking trades because you're scared, you're not taking trades because you don't trust the market. What is it? Is it that you don't trust the market or you don't trust yourself? Because the market does what the market does. It doesn't matter what the market is doing, up, down, sideways. We choose what we want to do with the market. Market's choppy. No one's forcing you to trade. There's no gun to the back of your head, hopefully, that is forcing you to take trades in a choppy market. You're looking for some type of pullback in a uptrending market and you're not getting it. That's not the market's fault. You're shorting when you should be going long. You're going long when you should be going short. That's not the market's fault. That's your fault. So don't blame the market. Don't blame, I can't believe we're going higher. I can't believe it never came back down this way. What is not hard to believe? What's hard to believe? You have no control over the market. It doesn't matter what the market does. You have the decision to jump in the trade or jump out of the trade. So what I want to focus on is higher time frames, 1 hour chart, 4 hour chart, daily chart. I want these levels marked out. You can see here, I've did a little, put some annotations on the screen here, previous day lows, overnight highs, previous day highs, overnight lows. Now, what we want to focus on is since we've been in an uptrend, okay, even though many of you guys feel that we can't go higher, we've been in an uptrend. I want to see previous day high get broken. Well, when previous day high gets broken, it needs to put in a new high. Okay. So what does that mean? If we're looking at previous day high and that price is broken, great. I need that new price to get confirmed. Now, depending on what time frame you're looking at, and for this particular example, we're going to look at the 5-minute. We confirmed breaking the previous day highs in the overnight session. We took out yesterday's highs in the overnight session, in the pre-market session. It was already done. Like, we already took it out. We put in highs of 16,906. So what are we looking for when the market opens? We're looking for a washout. We're looking for some type of trap. We're looking for some type of reversal. We want to get in on the down moves to go back with the trend. Now, we had a 20 SMA play set up in the pre-market where you can see here, going into after that first hour, you get a 20 SMA play here that sets up, it goes for a little bit. The level that I would have wanted to see again, is if you're not getting in at overnight session lows, notice how we sweep overnight session lows and then we start to bounce off of it. Notice how we never close below overnight session lows. We just sweep it. If we were to close below overnight session lows, bounce, get rejected, and then confirm the lows of overnight session, then we want to play that into previous day low. It's not rocket science. Since all we did was sweep that price action and then bounce up, the last thing you want to be doing is looking for the short position, because you're looking for a short position while everyone's looking to trap. So again, if the market can't move higher until we take out previous day highs, and you notice in the overnight session we already took out previous day highs, what do you think the pullback is? It's just a pullback sweep to trap shorts into rising support and then move to the high side. So if anything, we're looking for longs down in this area. Now, again, depending on the way that you trade, the type of strategy that you use, you can really start to focus in on, notice how when we put in this hammer candle and we swept the lows, we failed to confirm below it. You have an easy stop loss here below this hammer candle low. Why is it an easy stop loss? Because potentially if we get below it, we're going to start working our way down towards yesterday's lows. It's very simple. Notice how we, after we sweep the session lows, we then close back over the 20 SMA. I got into this play. This was my first trade of the day. Now I took 10 minutes of heat. I was playing one mini contract, wanted to get my feet wet, start the day off. And I was down about 380, 420, 450 at one point in time on this potential move. So again, if you're going to play larger size, understand that, if the move starts to go against you, you're going to take a little bit of heat. As we started to approach the previous day highs here and we started to make some money, I quickly got out of the trade. Now I sold way too early, way too prematurely, but it's okay. I wanted to build a cushion on the day. Now let me just zoom out here again. So the level before I went to go grab a coffee was, I was talking in the live stream at Evolution Traders and I said, well, if overnight session already confirmed, okay, if overnight session already confirmed yesterday's highs, right? Yesterday's highs, we put in that new high to 16,906. Previous day highs was here. We've already put in a new high. So what are we waiting for? All we're waiting for is a confirmation in the same direction that the train is going. And the train is going to the upside. There's nothing about this chart that looks bearish whatsoever. Does this downtrend look bearish? No, it's still above the overnight, yesterday's lows. All this is just a little bit of a back test here to trap shorts and ride higher. The market's been on a phenomenal run. So again, that 16,906 level was the high that we put in the overnight session. That's over previous day highs. This is a full send go here. The first wave puts in about a 30-point move to the upside. Now, I don't know about you, but taking 30 points out of the market is fantastic. I've made some videos about, the importance of the benefits of being able to snatch 30 points from the market. If you haven't seen those videos, go back. I uploaded them yesterday. But if we're playing 5 micro contracts and we snag 30 points at any point in time of the day, whether it takes 1 trade to do that, whether it takes 2 trades to do that, whether it takes 10 trades to do that, if we can snatch 30 points out of the day, that's $300 a day. We're looking at around $1,500 a week. We're looking at around $6,000 a month. I think that's a good starting ground. That's a good foundation to start striving for. Now, again, before I get some smart ass, well, you're never going to win every day. You're never going to win every trade. I know that. But what I'm trying to tell you is that on your winning days, if you can bank in around $300 and you can keep your losses to around $250, $300 on the day total collectively, then you can see that every day we're offsetting each other. And if we go on a string of wins, meaning some days you win 1 day, 2 days, 3 days in a row, you can quickly go up $300, $600, $900 in a matter of a week, even with 2 losing days on your back, because you're kind of scratching away the losing days. Again, trust the process. I've been doing this a long time. Just stop over analyzing everything. Majority, and I'm going to be completely honest and blunt, 90% of you want something that's going to work every single time. You never want to lose. You've never made any money in the market. You're still trying to struggle and figure it out. You stay watching YouTube videos. You're not implementing things that you're learning on a daily basis. You can't stick to the same strategy. You can't follow rules. You don't even have a written out trading plan. You don't journal your trades. You have no idea which way that the market is going on a day-to-day basis. You're just looking for trades to go because the market is open. I hate to put it that way, and I hate to be that blunt, but that's true. I mean, I see it all day long on social media. I read through the post. I read through the comments. I see other videos. I read, stock twits. I read Reddit. I read Twitter. I read all of this crap, right? Again, you're the only one that's not making money, right? I mean, let's be real. Everyone loses trades, okay? It happens. Everyone has red days. It happens. Nobody's perfect. Nobody's perfect. But anyways, if we want to stay on the same side of the trend, make sure that we're going and following the higher time frames. Make sure we're following the hour time frames. The overnight session high price that we put in was an automatic go. Now, whether you want to take 20, 25, 30 points off the run up, 10 points off the run up, it doesn't really matter. But, if you kind of look at the hourly chart, now if I go to the hourly chart here, just kind of take this crap off. If I look at the hourly chart, notice how when we took out yesterday's highs, we put in a new high of 16,906. Where do you think your entry's at? Your entry came here when we broke the 906 at 9 a.m. But after I got in on the confirmation channel, it pulled back. The range is only 45 points. It's 45 points. You're only losing about $90 a contract. Even if you're trading 5 contracts, you're only down less than $500 to potentially make $500. Put it into perspective. Okay, put it into perspective. So once we break the 906, we then shoot up to 933, and then the next candle opens up, slightly pulls back, and it goes on a monster run all the way up to highs of 981. If you don't understand what I'm talking about, you're going to have trouble in this business. The longer you have trouble in this business, the longer it's going to take you to make money. The longer you overanalyze everything and try to have the perfect entry, the more often than not, it's going to seem like you don't know what the heck you're doing. It was very simple. Yesterday's highs needs to get broken. I want to make this as simple. I don't even know how much more simple to explain this. I want you guys to stop for a second. I know that sometimes I talk fast, and I know that sometimes I use analogies, and I know sometimes it's hard to understand what I'm saying, but I want to make this as clear as possible. We want to use higher time frames. Example, daily, 4-hour, 1-hour time frames. We want to use those channels. Question, what is a channel? It's a candle. Okay, so whether we're looking at the daily or the 5-minute, a channel is a candle. What we want to see is previous day's highs be broken, or a previous 4-hour structure high be broken, or a previous 1-hour high structure broken. And we want potential. Now we know that this is a runaway train to the long side. We know that there's open skies to the long side. We know that we're trending to the long side. So do I want to be looking for shorts? No. So when overnight session highs has taken out the previous day's high, all I'm waiting for is that to get confirmed. So when we take out the previous day high, you want to go down to your 1-hour time frame. Now that we've broken the previous day high here in the overnight session, this becomes your entry point. Your entry point's here. What's that mean? When a new hour candle starts to take it out to the long side, you got to get in. 906 is your entry. Okay. Now let's say, for example, you weren't even looking at yesterday's highs. Okay, so let's forget about yesterday's highs and let's just look at the overnight session. Okay, pre-market highs were here. Overnight session highs were here. 1906. Okay, same theory. What's the theory? Overnight sessions need to be broken. We need to put in a new high. Okay, once we put in a new high over overnight session highs, which is 16,914, we want to get long. Okay, so here's the high price. Here's the confirmation. It pushes from 914 to 933. Great. Do we get out of the trade? No. What's our stop loss? Previous hour candle lows. That's a big stop loss. It's 45 points. Yes, it's a big stop loss if you're trading 10 mini contracts. If you're trading 5 micro contracts, it's not that much. It's under $400 loss. That's a lot. Then trade 3. That's still a lot. Then trade 2. That's still a lot. Then trade one. That's still a lot. 45 points is crazy. How come other people say to only risk 5 points? I don't know. Go trade the way that they trade. But I'm just telling you what's going on the charts. Okay. So again, this is not to be like mean. This is not to hurt anyone's feelings, because I understand a lot of people get their feelings hurt and a lot of people think that their way to trade is the only way to trade. Am I saying that my way to trade is the only way to trade? Of course not. Of course not. I would never tell you that. But I'm giving you my interpretations of the market and things that I wait for. Because I'm tired of people thinking that the market's open. Where's the first play? What's the first trade? Should I be going long? Should I be going short? Uh-oh, go short. Uh-oh, I got trapped, go long. Uh-oh, got trapped, go short. You're constantly battling yourself back and forth every day. When realistically, all you need to do is kind of wait for 1-2 setups. Take those setups, take 20 points, 30 points, 50 points out of the market, manage to catch 60 points, 70 points out of the market on a good day, and to repeat the process. Repeat the process. It's not that difficult. I hope you kind of understand what I'm saying. Yesterday's highs got broken. Here's the new high. When the new high gets confirmed, we go long. What do we use as a stop? 1 bar stop, 45 points. Okay. If you weren't looking at yesterday's highs and you're just looking at the pre-market highs, then what you want to see is that new high price get confirmed. And that gets confirmed here. What are you using as a stop? Previous 5-minute candle. So you're getting in here and it goes from a price all the way up to 932. No reason to get out of trade. And continues to go higher. There was never a reason to get out of the trade. I took a few scalps towards the end of the day too on this washout on momentum. Why'd you take that trade? I thought you said to stay with the trend. I know, but this is momentum and I've been doing this a long time. So when you see momentum, you jump in and you take it for a ride. If you can't see it, don't take it. It's not that difficult. But if you notice, when we swept the lows here and we started to bounce higher, we started to really break over, we back tested, we held the 20 SMA, we put in a new high, we back tested, we held it at 20 SMA, we put in a new high, we consolidated, we put in a new high, and then once we lost the 20 SMA, there's your indicator to get out. The 20 SMA is a change in trend. So if you're below the 20 SMA, the trend is bearish until we get back over the 20 SMA. So since we were trading over the 20 SMA all day long, why are we looking for shorts? Why are we looking for shorts? Why are we looking for shorts? I hope this video makes sense.